We also have the upper boundary of the rising wedge right here. I think we're likely going to reach this area and reach that upper channel line in the weekly time frame. Move into the 6100 area. We got the 9 count. We have yesterday we had a 13 followed by 9. It's a double sequence count reversal signal. Oftentimes you'll go a little bit higher. Sometimes you get the turn immediately, but oftentimes you go just a little bit higher. I think if we get that, we go a little higher, I think you're going to go slam up into this trend line. NASDAQ's just underneath it, a little bit closer. It might even get an overthrow. But I think you're going to go a little bit higher here, probably going into next week at some point, maybe with the CPI data. And then I think you're going to turn and begin to see the rising wedge begin to play out. Now, I do want to say this. We have another trend line that I'm watching, and I'll draw it in here for you. And again, that is from the peak over here in July, which was also a 9 count. We went a little bit higher. But again, if we connect this peak right here from the July 10th peak, and we connect it here to the peak with the presidential election rally, again, we're coming up and we're hitting that trend line right on the nose. So that could give us a reversal right here. If we fail to go a little higher, if we fail, reach the upper channel line in the weekly time frame. Something worth paying attention to. Now, we're going to be getting the jobs report tomorrow before the market opens. And again, it's expected to come in over 200,000. We're supposed to get 214,000. Remember, we got that weak number last month because of the hurricanes and the labor strike and all the rest of it there. Again, eventually I think that number will be revised to a negative number. You got to remember there are several revisions that go on with the jobs report. I've talked about the deterioration in the labor market that the Fed is ignoring. Unemployment rate is supposed to tick up to 4.2%. We're supposed to get 214,000 jobs. We'll be watching. Next week, we're going to get the CPI inflation data. That's Wednesday the 11th before the market opens, and then we'll get the PPI wholesale inflation before the market opens on Thursday. Again, this is expected to tick higher. Economists have, since the election, since President Trump won the presidential election, a lot of economists started to revise their numbers up for the November number, December number, on anticipation of the tariffs they expect to be inflationary. Now, again, we've had the tariffs already. During President Trump's first term, we didn't have an issue with that. It was a concern. We had the inflation until we had supply chain disruptions. The government said, hey, why don't we give everybody a check and have them try to spend it with all these disruptions, supply chain disruptions. It gave us QE Infinity and beyond, QE 2.0. That's where the inflation came from. But again, I just want to let you know that economists have started to raise their expectations for inflation. And I do want you to know, again, in 2007, the Fed was totally focused on inflation rather than the coming recession. Inflation did go higher. Inflation at that time, before the recession started, was higher than it is right now. It just started cutting, blindsided by the inflation. That's why the recession, they started cutting in timber. The recession hit in December, just a couple months later, and by January they were doing emergency cuts. Now, the conventional wisdom, listening to Powell right now, is, oh, no rush to cut, no hurry to cut. They're looking at inflation. And I want to say this. We could see the inflation data go higher. That might trigger volatility. That might be the catalyst. If we get the inflation data starting to tick up next week, the market could move into freak-out mode and say, oh, the rate cuts are gone. Not going to be, because again, we're going to have a recession in the Fed. Despite the surging inflation, the inflation data back in 2007 and 8, early 2008 there, the Fed still cut in January of 2008, did an emergency cut by 0.75%, and then the following week at the meeting, the regular meeting, did another 0.5%. They started doing jumbo cuts. And the inflation was higher than it is right now. They still did it because, again, they realized we're not going to have a soft landing. They believe their own propaganda. Soft landing business is a bunch of fairy tales. Fed's policies lead to negative outcome. But I'm just telling you, I'm predicting inflation is going to tick back up. And if it starts ticking back up, I think you could see that with this report right here. The market can move into freakout mode next week maybe we get the jobs report, the rally with the jobs report, or a pullback and then a rally just ahead of this stuff. If we see an uptick with the CPI come Wednesday morning, it'd be the catalyst for the reversal. Could see a peak in the market in December or January, but you got a good shot with those divergences in the weekly time frame. You're going to see it in December. Pretty good odds. I think there's a 95% chance we're going to see a peak in December, and if we don't, I think it moves to about a 98 or 99% chance in January. Still don't get it in January. I think you got about a 100% chance in the first quarter of 2025. I think you got a good shot. You're going to see it in December or January. And again, it looks like those divergences very well could play out in the month of December in the weekly time frame. We've got them in the monthly time frame, as I've talked about. Taking the time to show you all these trend lines, weekly and the monthly and the daily time frames. It's possible we get a peak in the market here ahead of the Fed meeting, or maybe it goes on with the Fed meeting, which is less than 2 weeks from now. Fed meetings have turns in the markets. The conventional wisdom is, the Fed is going to go ahead, Powell signaling a cut at his Q&A yesterday, signaling a cut. The Fed's going to give us another quarter cut in December, and then they're going to pause and they're going to stop. Poppycock. That's a bunch of Kool-Aid. The economy's so good and stop because of the inflation. No, they're not. They're going to end up doing an emergency cut at some point. Even if they did stop, they would immediately reverse themselves because recession is around the corner. They just happen not to believe the reliable recession indicators that I've talked about, and there are more of them. Dismiss these things, and they dismiss deterioration in the labor data that I've talked about. I told you yesterday. Powell thinks that's the most reliable data that they have. All the fake numbers that we get. Even if we get fake numbers, eventually we're going to see negative numbers. They can't hide the fake numbers. They can't hide the negative numbers. They may put lipstick on a pig and make it look a little bit better than it is, but you will see negative numbers as we move towards recession, or right before recession. We will see that happen. Again, next week, surrounding the CPI data and the PPI data, or right after it. Again, sometimes one is up and one is down. Sometimes they're both down, but again, both up. Oftentimes, one is up, one is down. But as far as the market I'm talking about, the market, sometimes maybe it's up with the CPI, but then it starts tanking with the PPI. Sometimes it happens that way. As I've just noticed that oftentimes market is up with one and down with the other. When we had the bottom after the September low, it was up with both. So again, just something worth paying attention to. But the inflation data could be the catalyst because, again, I'm telling you, inflation is going to go back up. The economists are raising their estimates. Next two reports that could freak out the market. The Fed's not going to cut. Remember, I talked about that scenario where they think, the Fed's going to do less cuts than hoped for because the herd believes the cuts are bullish, the cuts are bearish. Fed is not going to stop lowering rates, even though the herd might end up believing that if we start seeing inflation reports tick higher. Recession is coming. Say, just like in 2007, if the inflation data does tick up, it's still going to cut because the recession is right around the corner. It happened in 2007. This could possibly be a catalyst. The sell-off next week is the CPI and the PPI inflation data. So you want to be watching this closely, especially since we are so close to our target levels, the S&P 500 and the NASDAQ. Please support the channel with the link directly below. That allows me to be able to provide you this information. Follow the link. It'll take you to a secured site. If you could take a moment to do that, I would really, really appreciate it. If you like the charts, you like the indicators, let me know that by supporting the channel. I have a direct relationship with you. I don't want any sponsors. I turn all those offers down. Contact me all the time, and I turn it down because I don't want to sell you stuff. And that's really how money is made on channels for the most part, and I would rather not do that. So I just ask that you do what you can to help out. And again, if you follow the link, it'll take you to a secured site and you can donate any amount you want. Please consider helping out today. I thank you for your consideration for that. VIX is, again, forming this divergence with indicators like the RSI and other indicators. Again, I told you, and the VIX up yesterday when the market was up. And again, the VIX has come down below the lower band here. below the 200. I told you again ahead of the presidential election rally, we're likely moving back down below the band and back to test the 200. We've done that. Talked about a divergence developing. We've now done that. Told you the tightening of the bands is telling us something big is about to happen. Okay? I think you got a good shot that we see a peak in December or January. And again, divergences play out immediately in the month of December on the weekly charts and the monthly charts. You could see it in December. I believe the VIX is going to go back and fill this gap. Now, oftentimes the VIX will bottom before the S&P tops. Here, they are doing it around the same time. We'll be watching that going forward, but be paying attention to what's going on with the VIX here. We still have that 50 above the 200. We look back all the way back to 2007. When you get the 50 above the 200, that's when you start getting these tops. That's when you get these major sell-offs in the bull market here. 2018, 2015, and 16. The pandemic sell-off. The 50 is the green line. The 200 is the black line. And again, the 50 getting above the 200 during the 2022 sell-off. And now it's still above it. And the Bollinger Bands are tight. Now, something's about to happen. So I wouldn't ignore the VIX. It is very low right now. The warning signs are there. I talked about this trend line from the July peak here to this peak right here, and we're coming up and we're turning off of that level. We'll see if we can go a little higher or not. Again, count could give us an immediate turn, could go a little bit higher. We tagged that upper Bollinger Band yesterday and turned off of it. We were less than a point above the upper Bollinger Band on the daily chart. We'll see if we get above the upper Bollinger Band and come up into this trend line. My guess is that will be the case. A few other S&P charts, and I've had this target of 6,100 for the S&P 500. I believe that we're going to overthrow the monthly trend line, the target in the weekly time frame. That's coming very close to this level. If we go above the upper Bollinger Band, this is a daily chart of SPY. If we go above the upper Bollinger Band, again, we can slam right into this trend line, which again, this is from the 2023 low. We found support at it, down over here and over here and over here. We broke it, and then it acted as resistance. And again, it's likely going to be that we're going to test this trend line, and that could terminate the advance with the larger divergences, multiple divergences that are developing on the MACD here and on the RSI, very similar to what we had back over here. This gave us a pullback. This will likely give us a reversal. And another confluence of resistance right here, this trend line right here from the 2023 low, the same level, upper boundary of the rising wedge in the daily time frame at that same area again as the trend line in the weekly time frame, the upper channel line. So just a confluence of resistance at a bunch of these trend lines. So again, it's all pointing to, you know, this mid or high 6,100 area or so. If we move above the trend line, connecting the July peak to our peak right there, which we're at right now, again, I think we can go to this trend line. And again, you could do that this week or next week. If you could do it, be at that high 6,100 area. If it take longer to do it, drags out into January, then you're going to be in the 6,200 range. Again, further right you go to the chart, the higher the trend line goes, the target goes. But again, you've got multiple point divergence in the weekly time frame. Other divergences led to significant sell-offs. This one will likely lead to a reversal. It is multiple point divergences lead to reversals. Again, we've got it on the MACD. I talked about the possibility of a pullback. Don't rally with the jobs report. It's possible we either peak at the trend line, talking about in this video from the July peak to the November high. If we pull back, this little rising wedge now here on the 60-minute chart, had a little tiny divergence here, start giving us a self. If we pull back, do we still go higher? Do we still go higher and end up getting this larger divergence in the next few days, something like that? And that would take us again right into smack into the inflation data. So do we go back and try to fill this gap and then come back up and get a peak, and then that's, reach, the mid to high 6,100 area levels I'm talking about? Again, we had that divergence previously on the MACD, and it just gave us a little bit of a pullback, and we went higher, we gapped higher, and now you've got this triple divergence here. So again, do we sell off a little bit and then end up getting a larger divergence on the RSI? We'll be watching to see how it unfolds. We reach those objective target levels, or is it close but no cigar? Showing you the Dow is reaching the trend line in the weekly time frame, so is the Russell. Index overthrowing it a little bit. A little rising wedge here on the 60-minute time frame, a little divergence completed today. We got that 9 count in the daily time frame. Do we overthrow it a little bit forward? Just a little pullback like what we had right over here. Looking for clues. We've got really two equal peaks here on the RSI, so you got possibly a Class B divergence if, again, we turn off of the trend line from the July peak. If we turn off of that trend line right there, go a little higher, you can reach this other boundary here from these highs over here. But we got a down day, so we'll be watching, can we reach these levels or not? We'll be looking at that, and again, you still have the potential divergence on the MACD. Class B divergences here on the daily chart. Gap fill down here is at 60.50. This one was at 59.50 area. This one is at the 60.50 level right on the nose. So we'll be watching that. High today was at 6,094.5, just below that 6,100 area where I think we're likely going to reach it. Again, from these highs, looking at just about 1.5%, just a little bit more than 1.5% higher to reach the upper 6,100 area. Within striking distance, S&P was down 11 points, down 0.19%. I'm looking at that upper Bollinger Band. We closed just under a point above it yesterday. We turned down off of it today. Again, going to be looking at this trend line carefully. Now, as NASDAQ is making a higher high, NVIDIA is making a lower high. I think you're setting up a right shoulder. You can still go up and hit this trend line. If you do, you hit the trend line in the longer-term weekly time frame one more time. I wouldn't rule that out. That would be maybe a 3 drives to a high, 1, 2, this whole thing being the 2, and then maybe a 3. We see, as I've said, a right shoulder after this 14% drop, and then tanking below the blue trend line and below horizontal support, and that could terminate the market if NVIDIA takes out that shorter term channel I talked about earlier in the week, bursting off a longer term channel. So again, I've been talking about those levels. Now, as S&P is stowing at this trend line just below this one, NASDAQ is just directly underneath the upper boundary of the rising wedge from this July sell-off. This to the NASDAQ, which is directly underneath the trend line. We haven't quite reached it. And again, from this July sell-off, they're similar to the S&P500. We connect that July peak with the November peak. We've already overthrown it. S&P is turning off of it. I think S&P will end up hitting this trend line. NASDAQ could even overthrow the upper boundary. Rising wedges do that. But you got this divergence going on with the MACD. Could be see a pullback before the S&P reaches that upper channel line, and we're just below it here. Probably end up tagging it or overthrowing it. So again, I'll be watching to see what the response is to the jobs report tomorrow, and then on into next week with the CPI data. You got a good shot. You're going to try to set up peak for the market in December. I'm watching the jobs report this week, the inflation data next week, and then the Fed meeting in less than 2 weeks from today. NASDAQ's overthrown that upper channel line just a bit. We'll see if we close above it or not. We'll see what happens there with that. Like the S&P 500, we've seen, again, an extreme reached here. We got a little tiny divergence. I didn't mark it there yet, but a little tiny divergence. Again, do we come back down, turn back up going into next week, and see something like that set up? Maybe come back, fill the gap, and come back up like that. If we sell off with the jobs report, we'll be watching to see what happens. Assuming that we get a bigger sell-off surrounding the jobs report going into week, and again, do we rally ahead of the CPI data, or rally to a new high with it and then sell off CPI, or after the inflation data? Does a divergence, a larger divergence, develop here? We'll be watching to see how it unfolds. I think we'll likely reach those trend lines in the daily time frame. The boundary of the rising wedge Nasdaq was just below it. S&P a little bit further away from it. No divergence on the MACD, but it did roll over with the pullback that we had late there in the session. Nasdaq ended down 67 points, down 0.31%. Quickly, something worth paying attention to, the Russell. Watch to see if it ends up diverging with the S&P at turning points. Sometimes it does, sometimes it doesn't. But again, it did peak November 25th here. We've turned down off of the trend line here. I've got the red trend line from this boundary, these highs right here. And if we just go back further and connect these highs and the peak over here, you got a longer term channel there in the weekly time frame. But again, we're turning down, and those trend lines are both right around this area here. We're turning down off of the trend line. I'll show you the weekly chart in just a second. But we've had these divergences in the daily. I'm watching to see if this high is going to hold from November 25th. Got the divergences beginning to play out on the daily chart here. So Russell stopped making new highs. Now, today it was down 1.17%. We had market selling off today, pulling back. We're going to be watching the jobs report and then on into the CPI and PPI inflation data next week. But keeping this channel in mind, let's take a look at it on the weekly chart. So far, we're coming back and filling the gap here and testing the 20 period. Again, I'll be watching to see if this high holds if we stop making new highs. There's that longer term channel going back to late 2023 here. And again, we've gone higher above this peak over here. A topping tail last week in the form of a doji spinning top looking candlestick, a divergence in the more recent price action here on the weekly chart right here. And again, does this high hold? And if so, see a divergence form with the S&P. The S&P has a really good shot of peaking in December or January. We've reached the target level on the monthly chart, but I told you I thought we'd overthrow that level and go hit the upper boundary on the weekly chart. S&P, the Russell has already reached the upper boundary, the parallel upper boundary to this trend. The Dow turned down 248 points today, still above that 10, just like S&P 500, but pulling down off of the channel here, and we have it down about 0.55% there. MACD still has not rolled over. Again, sometimes the Dow will peak before the S&P. That always isn't the case. Sometimes it is. Again, if we start trying to move back up to the upper boundary of the channel, could see a little divergence develop on the histogram there. We have a little tiny one here on the RSI, again with these recent peaks here on the Dow. So again, going to be watching, do we go back up in that level, or does the Dow start reversing ahead of the S&P, which I do believe the S&P is going to reach that 6100 area. But just a channel I'm watching here on the Dow. And with this peak right here, the Dow is slamming into the upper channel line, just like the Russell. So that's interesting. Russell and the Dow are reaching those channel lines in the weekly time frame. The S&P has not yet reached it. The Dow's pulling back with this divergence on the 60-minute chart so far, coming back to fill the gap here. Very similar to what we're seeing on the Russell. For the week, the Dow is down 145 points, down 0.32%, so about 1/3% lower. Getting a candle of indecision on this Thursday, at least so far. We'll see what things look like on these weekly charts by the end of the week. But again, it is possible the Dow peaks ahead of the S&P. You have both the Russell reaching the channel and turning off of it. You have the Dow hitting the channel, the upper line of the channel on the weekly time frame, turning off of it. Nice looking parallel channel here, just like on the S&P 500. Again, some other trend lines right here from these highs over here. And here I've just connected this peak and our recent peaks here in the last 2 weeks. This is the log scaling, and it is forming a divergence here on other indicators like the price oscillator and the MACD. And again, nice looking channel here. Again, look at the RSI, these multiple points of divergence. It's Simple divergence that leads to a pullback. It's multiple point divergences that lead to a reversal. Something we're paying attention to because we have the Dow, we have the Russell reaching the upper boundary of their channels already. The Dow is slightly overthrown that trend line in the monthly time frame, 125-year trend line. He just reached it last Friday on Black Friday on the abbreviated session after Thanksgiving. Again, could the Dow peak ahead of the S&P 500? We'll see. Could the Russell have already peaked and be turning off of that level? Just some things I'm paying attention to on the other averages. Look, this is something right here. Look at this divergence. On the RSI, this is pretty amazing. This is a pretty big divergence and will likely lead to a reversal for the Dow. Talked about the S&P 500 reaching last Friday the upper channel line, the long-term channel line, nearly a 100-year channel, tagging it, pulling back off of it, and then we've talked about overthrowing this level, which we're now trying to do this week a little bit. I think it will end up overthrowing it more and going into that 6100 area on the S&P 500 in the weekly time frame. But as we're turning off of this trend line, or actually tagging this trend line, again, that's just long-term channel in the monthly time frame that I'm talking about right here, that we're slamming right up to it. Right now, we're just slightly overthrowing it with this week's high. We're going to reverse here, but again, like I said, I think we'll probably overthrow it a little bit more. I think we'll end up dropping back down to this midpoint right here, back towards the pandemic low or just beyond it. Your sell-off would be back to the highs back in 2000 and 2007, right around 1575 to 1550. I talked about these target levels. I think you could drop, 50, 65%, something like that. I do think we'll end up getting another bull market after this that will give us a lower high and then eventually make our way back towards this longer-term trend line. Again, when you have valuations as high as we have right now, over 200% on the Buffett indicator, which is market cap to GDP, again, you get these long periods of drawdowns. Here we had a sell-off, a rebound, move 25 points above that level, and then move down to a new low. I think you'll see something similar to that where you get a rebound back up to get a slightly lower high and then a lower low. And again, long periods of drawdowns here. 60s and 70s, we didn't go anywhere for 16 and a half years. After the 29 peak, you didn't make new highs for 25 years. After the 2000 peak, you didn't make new highs. You made a new high of 25 points and then reversed and moved to a new low, but you didn't break out of that range and consistently go higher until 13 years later. That's what high valuations tell us about the market, that there's going to be a long period. We have low returns or negative returns, and that means you're going to get a crash or two over the next decade, like we had in 2000 and 2007 and 8 there, crashes that we had in the 60s and 70s, in the late 60s, and then the 73, 74 crash and all the rest of it. As the S&P is testing this upper channel line, long-term channel line, the peaks in 1929 and 2000, which again, both were very big drawdowns in the market, will likely be a significant drawdown as well. Now, if we look at the long-term monthly chart on the Russell, and this is going back to all the data we have to the 1980s, again, you got potentially a double top going on here with the peak here, which we've already hit the upper channel line parallel. All I've done is excluded the shadow there from the of the financial crisis. I don't think we reach this peak up here on the Russell. I think you're forming a double top, and I think we'll end up seeing confirmation here. But I do think that the second peak is now forming on the Russell, which will likely eventually make its way again to test the pandemic low here and probably this lower channel line. So that's why I think the Russell is likely headed here. Now, the measurement of the sell-off is about just under 34%. But if you take from our recent high right here, and it looks like I'm a little bit off on that. Let me see the recent high right here. And we take it down from this low right here. Again, it's taking you down towards this trend line here for the double top. The measured move, the measurement of the double top from the confirmation line would take you down into this trend line. So that's where I think the Russell's eventually headed. I think it's already turned off this trend line. I don't think the Russell will reach this upper boundary here in the long-term monthly time frame. But Russell's already turned off the trend line. And then if we look at the long-term trend line on the Dow, and again, this is going back 125 years. But if you look at this, again, we've had touches here. We just touched it there in 2022. We're overthrowing that trend line. Very similar to how we overthrew. If you connect these points to the 2000 top, or the Dow peaked in late 1999, whereas the S&P in early 2000, if I recall. We have several touches here, but we're slightly overthrowing this level right now, and that's exactly what we did in 1929. But again, the long-term channel of the Dow is probably not going to be able to stay above that trend line for very long. In 1929, we certainly didn't. We had an overthrow move, and then it turned and ended up crashing. What was it, down 80 something percent, 90%, something like that? I can't recall. But again, was overthrowing that trend line a little bit. The S&P probably will get a little bit bigger of an overthrow as well. I want to show you these longer term charts. Want to show you the Dow. Want to show you the Russell. We're currently looking at on the S&P 500. A similar monthly channel on the NASDAQ. We're just a little bit below that level right now. Again, just with the data that we have on the NASDAQ 100 since the 1980s. So again, I think we're eventually headed back to this midpoint right here beyond the pandemic low. Again, I think we could see a 60 to 80% drop on the NASDAQ, but I think that this is where we're likely headed, and likely something similar to the S&P. We'll probably see a bear market into 2026. We'll probably get a new bull market, rise back up, get a lower high, and then eventually see another bear market that will eventually take us back to the lower end of the longer term channel. Again, long periods of drawdowns, just like we had after the 2000 top. Again, a long period of a drawdown. We didn't start making new highs until about 17 years later on the NASDAQ. So again, this is an area also of support. The peak of the tech bubble is also a level here where I'm looking. It's intersecting with this trend line and just below that pandemic low. So that's where I think we're likely headed, back to this trend line or to the peak of the bursting of the tech bubble. It's really funny because this isn't a bubble. That's not a bubble, but this is. It's incredible. This time it's different. AI. That's the same thing they were saying back over here with the .com stocks and the tech. I just wanted to give you some of these longer term charts along with the Dow and the Russell. We're already overthrowing that trend line in the weekly time frame, but if you just look, again, we're directly below this trend line right here. If we include the shadow right here, if we exclude that shadow, we hit that peak at the 2021 top from the peak here, excluding the shadow with that 21 top. If you include the shadow, again, it is directly overhead here on the NASDAQ. I think that we're, again, overthrowing that monthly trend line. I think we're moving to this channel line. The Russell's already reached it. The Dow has reached it. Even the NASDAQ has reached its upper boundary and overthrowing it. The S&P has not. Guess as it likely will. It's taking, again, these trend lines and these points right here and the points over here and just drawing a perfectly parallel channel. That takes the S&P to the upper boundary of the rising wedge. NASDAQ may even overthrow it and go higher towards that monthly trend line.